So over the last 100 years of our history, especially in America, when it comes to the inflation problems, we see that there's a common theme that happens with There's a common thing that happens around these actual markets, and you tend to get actually two spikes, and the second spike is actually a lot bigger than the actual first spike, and that's exactly what I want to cover with you in today's video. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so one thing I really want to cover through here is that people that are worried about inflation and what's happening right now and inflation coming down and what's going on and where we're going from here, and what does history say about itself. And we all do know, right, that similar things happen. The same things happen again and 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 again in our life, right? The same sort of things. So the thing is that if you want to get a good gauge of what's coming over the next, say, 5 to 10 years when it comes to the inflation and what that means for the economy, but also what that also means for your investments and so on and so forth, then I want to share something with you here because what we're looking at right now is we're looking at the inflationary data, okay? We're looking at the inflationary data. And we're looking at the last 100 years when it comes to the inflation. Now, once again, as I said before, is that if we can look back over the last 100 years and we can see that there's like every time we've had inflation problems, what has been the big common theme around those inflationary problems. And then we can sort of sense of what's going to come over the next 5 to 10 years by looking at, say, a 10,000 foot view here. And that's exactly what we're talking about here. And so there's obviously been 2 times we've had inflationary problems in our markets, right? We've had 2 problems. We've had 2 times. One was back here in the 40s, okay? And then one was back in the 70s. We also do know the 70s inflation. By the way, I believe we're a repeat of the 70s inflation. So therefore, that's the reason why I see towards the end of this decade, we're probably going to be experiencing one of the greatest bull markets we've seen in the metals and miners. Okay. So looking at what we're looking at right now, okay, and looking at this level through here, what we can see here from the inflationary data perspective, we can see 2 things. Firstly, we tend to get the first spike. Oh my goodness, inflation's out of control, raise interest rates, all that sort of stuff, okay? Now they're talking about price controls. Again, if you study history, right, study Mike Maloney's Hidden Secrets of Money, study that, and you'll be able to see price controls. It's the same thing again and again and again and again, right? Which actually gives you the power because you can sort of see the future. Because was it Mark Twain that said, the further you can look back in the past, the further you can look in the future? Because it's the same type of things. It's just replaced with something new, right? Nothing's new underneath the sun. And so we can really understand that same type of trading patterns produce similar results. Same type of cycles produce similar results. Same type of times produce similar results. In this time, it's what? It's the inflationary data. And so I really want you to, if you're focusing so much on right now, like for an example, right? History. Right now, people are focusing on the AI. Oh my goodness, AI. And I've been watching a documentary with Bill Gates. A little thing on Bill Gates recently right now when it comes to all that sort of stuff about the future of AI and so on and so forth. So the one thing that I do say is that when you really think about it in our history of the transformation things that have happened, right? Like, it's like it came from from the horses to the cars to like the internet, to all this sort of things happening out there, right? The internet out there, and it's like, look at our lives right now, and there's always this common theme around these new technologies brought in, right? New things that are brought in. Oh my goodness, this is going to destroy the world. They're going to take over. They're going to use this to blah, 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 blah. All that sort of stuff, right? They're going to go down that bastard rabbit hole, right? We're going to lose jobs and what's going to happen to jobs and so on and so forth. But what ends up happening, if we look at the last 100, 200 years, as these evolutions of big inventions come, right? Like farmers no longer need a lot of workers on the farms. And the factory workers no longer need that because of what? Machinery, right? But that actually made our quality of life better. How do I say that? Just look at people. Look at the average person back in 100 years ago. They were thin. Now look at our quality of life. We're so damn lazy, right? We're so fat. Anyway, that's why I'm always big on taking care of my health. Anyway, so back to the topic at hand is that the purpose of me saying this here and bringing up all the umbrella of what I just brought up in the last 4 minutes or so, last 5 minutes, is because once we can see that, we can get a really good sense of, okay, over the next 5 years, this is probably what it's going to look at over the next 5 years. That gives you the power to say, okay, I'm not going to be shocked when it starts to happen, right? But I also can utilize that to benefit. That thing that I saw back in the 70s, it's now 2026, 2027, and I'm starting to see this thing happening again. Maybe I should be looking for positions because it's starting right now. And then that starting is probably going to lead to something over the next couple of years. So maybe I can position myself in certain investments, trading opportunities, so on and so forth, to benefit from that, right? So we can start to utilize this to our own power, right? Which is just, it's actually quite common sense when you look at it, right? But what do we tend to see with these inflationary problems? We tend to get the first spike, and then we get the drop, and then we tend to get a second spike. Why does that happen, John? It's probably going to be, the whole interest rate thing, rise interest rates, drop interest rates, recession, printing money, all that sort of stuff, right? And then the secondary spike, right? What do we have through here? We actually had 3 spikes through here, didn't we? We had the first spike, the second spike. We had the second spike through here, and then we had the third spike, actually, right? So that was 3 spikes. But the 2 big spikes came from what? This spike here was much bigger, and then even much bigger, right? So it actually came to 3 spikes. But the 2 big spikes, as you can see, this spike here is much bigger than this spike. So we can look at what's going on right now in the context of things. What do we get? We've got the first spike. If there's 2 spikes that happen, that's the first spike, and we're coming down through here. All right, we're coming back down. Everything's good. All right, come down. Bam, something breaks. Recession. Here we go. Printing money. Here we go. Right? Yes, they're going to do some more printing money. Actually, they probably haven't stopped, right? They're probably still going right now. Right? So, John, the debt bubble. Not yet. Okay? Don't focus on the amount of debt. Focus on the serviceability of that debt. That's what you should be focusing on. Anyway, so therefore, what we're probably likely to see? We're probably likely to see something like that. All right? Because history says that. But initially, what are we going to get? Initially, if we take this off here, we get a few years of what? Now, this is big picture. A few years of really flattening of the inflationary, right? We come down, we get a few years of flattening out inflation, and then we get the big spike. We're probably going to get maybe another good couple of years of inflationary not being an issue. Oh, inflation, what's that? Go away, so on and so forth, right? And then we tend to get what? Spike, and spike. So if you can utilize this, what are the beneficiary factors of an inflationary problems like this? What are the big factors from there? And what can we look at from that point of view to actually see that? And that's the reason why, guys, I truly believe, from the metals perspective, silver and gold went crazy when this happened, especially in the late 1980s, right? We all know that. We've seen that on the charts, right? Actually, in fact, let me just show you this here. When it comes to the good old gold market, right? This is the weekly chart. Look at this is the 1970s back here. Right, where's the 1970s? This is the 1970s here, right? Look at that there. That's the late 1970s through there. That's what happened after the inflationary spike. So this is where gold and silver are going to go absolutely just crazy when this happens, right? We can see this happening through here. Now, obviously, there's not a chance, but if I'm risking a small percent of my account to potentially make that massive move, then maybe there's something happening there. But again, we're probably going to spend a couple of years doing what? Probably nothing. After this period, I believe gold has a short term over the next. We probably have a bit more move to the upside, but on the overall picture, we're probably going to have a bit of a drop, especially when the recession starts to hit from everything from there. And then when I'm starting to look at the actual mining sector from a mining sector perspective, I believe that there's a big cycle. I believe there's a big cycle that's happening right now. That there's a new cycle of a big mining boom coming forward from here. So. Always traders, if you look at what the big, really successful people do, what do? They go, oh, this is like this time back in the 1949 or 1929 period or the 1970 periods, right? We go, this is like that time back then. Because you hear Ray Dalio do it all the time, and you hear Paul Tudor Jones do it all the time.